Jesse, we'll start with you. Tell us a little bit about Cross River.
Sure. Cross River is a bank that really focuses on the plumbing of the fintech ecosystem. So we really have one branch, but our claim to fame is we have a completely API-based ecosystem. So pretty much anything you'd want to do banking-wise, you could do with us via APIs. And I'm responsible for how we challenge ourselves with our customer input, as well as we drive innovation based on where we see the market going.
Ashwin, you want to talk about Investors Bank? You guys have been around since 1920. I didn't know that when I did the research. Tell us a little bit about what's going on.
Yeah, absolutely. So we've been around for that long. We had about 150 offices across New Jersey, New York, and Long Island. We're one of the few banks that still drive business traditionally. What makes us different? As a manager, I'm out there working the community, connecting the clients, and deep dive and have a quality interaction with our client for opportunity to help them drive business or help them financially successful. So pretty much in a nutshell.
Great, thank you. Dennis, Credibility Capital, what is, in addition to the company, what was the idea behind the creation of that?
Yeah, I mean, one of the things that we feel at Credibility is there's a lot of small businesses. Small businesses drive America. They drive our economy. They drive New Jersey. And as a small business ourselves, we know how difficult it can be to get capital without necessarily giving up equity in your company that you're struggling to build and putting in 24 hours a day trying to grow. And when we looked at the lending space, I mean, on one side you have the banks like Investors Bank and other great lenders out there, but it can be challenging from a regulatory perspective for them to give loans to people. On the other side of the ecosystem, you effectively have these payday lenders that effectively would be payday lenders for consumers, but for businesses. And Credibility Capital plays the role in the middle, where we're not necessarily as competitive as an SBA loan, but at the same time we're transparent, we're fair, and we focus on the customer experience. And our mission is to help businesses grow.
Jesse, why fintech? What created that market for you guys?
Why not fintech? So, I mean, I think that the evolution of where we got and how we kind of came to service the fintech community, and just to be clear, we service all sorts of businesses, but we kind of have our claim to fame in the fintech world, is because they're really pushing the face of innovation. So when we talk about disruption, especially in the lending area, we do a tremendous amount of business with marketplace lenders. And our plumbing and our ecosystem really helps them create liquidity where there isn't any. And I think that both us and some of the other peers on the stage play an important part in making sure the small businesses thrive and they have access to the same capital as a larger business, a middle market business. So the answer why fintech is because there's a need, and there was really a vacuum of banks delivering to that market in a consistent way.
Ashwin, with respect to investors, obviously, we've seen a lot of big consolidation in the banking world to these conglomerates. You still have that personal touch. You want to describe a little bit about the bank from that perspective, how important it is?
Yes. Investors Bank, what I like about investors is that we cater a lot to the community. We give our time back. We do a lot of sponsorship or give a lot of grants, and that's part of the reason we give back. As a manager, I make sure I meet my clients, business clients around my area, and find the needs. And even nonprofit organization, we're real big on them. And just again, going back to the first question is looking in deep dive how we could meet their needs and all that.
Great, thank you. Dennis, somebody comes knocking on your door. How do they find you, and what's the process they have to go through?
Sure, absolutely. We have our website, credibilitycapital.com. Again, our goal is to reduce friction. We have a 7-minute app. A lot of technology, a lot of fintech driving our process. So very easy to fill out, giving us some paperwork, giving us some information. The great thing about what we can do is if we're not able to make the loan, we're not able to underwrite it, we also have a variety of partners that we work with. The fact is it's very difficult. We're not necessarily a startup lender, but we have relationships. We have a lot of friendlies who are, and there's a lot of opportunity there. So I think the number one thing, if you look at our website, you look at the reviews, consistently we get 5-star reviews because we do treat our businesses, our applicants in a one-on-one fashion. They have a a tailored experience for them, bespoke underwriting. And we look beyond, while data science, while fintech, while being able to gather all this information is important, we also have people who understand their area of business, their industry. Our underwriters are able to make loans that sometimes purely scores, whether it's FICO, whether it's business scores from various sources, would say no to. So I think we offer a bespoke experience while at the same time leveraging technology to say yes more at a nice price for both our investors and the businesses.
Do we have any questions yet for any of the panels? Okay, great. Jesse, what's next for Cross River? Any obstacles you see in the marketplace?
Huge opportunities. So I think that what's next for Cross River is really deciding where we can make the most impact and have the greatest benefit to the largest number of customers. So we have a unique situation in that what we're really trying to do is enable partner ecosystems. So when you work with a large fintech, in many ways you're probably interacting with us. And so it's how can we get greater awareness of our solutions and get those solutions out to benefit more end customers. There's tremendous things we're doing right now, like a push-to-card product to enable instant payroll funding. We do amazing things on the lending side. And it's really about figuring out how we enable our end partner to deliver a great experience to consumers. I'm sure there's people here in the audience who, if they had access to our APIs, could come up with the next great idea. You know, being able to fund a debit card in 5 seconds with 7 lines of code is something that's amazing, and it's really empowering. Same thing in terms of giving access to marketplace lending and having a complete re-underwrite and being able to get quick availability to those funds and instant disbursement. The number of things that we have in front of us is really limitless. Our biggest challenge is figuring out where we can deploy that technology to have the greatest impact.
Any ideas where you think that next evolution may come from?
Sure. I mean, so my personal pet project right now is RTP. So I'm spending a lot of time with the build out of our connection to the Clearinghouse RTP network. And you know, I think that especially in terms of commercial disbursements, it's going to have a huge impact. It really takes the best of wires, the best of ACH, the best of some of the other different channels, and brings them into a pretty nice hybrid platform. And the fact that it's a good funds model, which means that once the money's there, it's there, is going to really enable, I think, the next generation of commercial invoicing and commercial disbursements.
Ashwin, what are you seeing in the marketplace with respect to the consumers you're dealing with?
So a lot of things has changed overall in banking and the retail aspects. You know, years ago you could go to the bank and have a human interaction and do a simple trend deposit and all, but things has changed overall in the layout of the bank. Now you could do all that simply by going to an ATM. We're one of the few banks that still have the human interaction. We're changing the setup, the layout of our layout of the bank. So we still have people such as myself would have that connection. You could always reach out to me or one of my bankers for any concerns that you would need in terms of banking. If you have a client or someone that needs any lending, like some of you have said, we go into case by case and look at everything from a full spectrum and, you know, advise you the next step thing to do. And we're continuing to do that today. The banks now, we're going to digitalize everything now, but again, we're still traditional. And going back to the community, one of the things that we've done in the community is like what we did today. We have a booth and people come out and say, hey, I'm not happy with this bank, I'm not happy with that bank, and they're asking what difference us, and it's in one word, community. It's all about human connection.
At this point, okay. Dennis, from your perspective, is there anything off limits that you guys won't look at?
Well, I mean, obviously, earlier there was privacy. We're very careful in terms of consent. I think where the industry, where the technology is going, is to afford consumers, but also small businesses, small business owners, the opportunity to leverage whatever data they choose to leverage. So, as an example, education data. Now, that's not something that we've typically used in underwriting, although the FDIC as well as the Fed have done studies to show from a student lending perspective what your degree was in and where you went to school was actually quite predictive in terms of your ability to repay. And I mean, they've published these papers. I mean, they're generally academic papers. But the fact is if I did go to Harvard, let's say, one of their conclusions was people who went to Harvard paid way too much for their loans, whereas people who went to a for-profit institution paid way too little. And obviously that's an inequality that the private market would try to correct, except for the fact that $1.4 trillion is all federally funded loans. I think that if I've gone to Harvard and have an MBA from Harvard or a degree from Harvard, that is something I would love to be able to use to help me get a loan, whether it's consumer, whether it's small business. Today, we wouldn't do that without consent. But I think in the future, that will be the model, things like social media. Imagine getting a decline reason on a consumer app, you don't have enough friends on Facebook as an adverse action code. The fact is we're not doing that today, but I feel that in the future we'll allow folks to give their consent to leverage this data to help me get a loan, to help me get an offer. From my perspective, I also think fraud is a big concern of mine. As the fraud rings, and full disclosure, I spent 3 years at Verizon, and the fraudsters are magnificent. They never stop. They never sleep. They have more automation than anyone up here on this stage does because it's so profitable to them. So, as I think about reducing friction in the process, I think as you all look to reduce friction, to increase sales, to increase to beautify the customer experience, you have to balance that with the potential fraud risks. And the nice thing is no one in the industry wants a fraudster. Everyone, they may not tell their secret sauce of credit or anything else, but they're happy to share information on how to stop fraudsters.
Question? Yes, ma'am.
My question is to all three of you, and also perhaps you. Do you guys talk about potential negative interest rate environment and what that does to the lending space in the fintech space? And let's say that's 5 years down or 3 years down. And what are the implications for that and for your businesses?
Jess, you want to take it about?
Yeah, so why don't I take a start? So I think that the question was, what would be the impact of negative interest rates on the fintech, the ability to provide capital to the fintech environment? I think that that's a challenging question on a bunch of fronts. So the first one is lending to the fintech, the startup seed, Series A, B type lending, which has a lot more to do with the promise of your platform than the overall interest rate environment. So I would say it's probably going to be largely unaffected. The debt space. So I think that the debt space is also interesting, and we deal with that quite a bit. It's going to really have to do with what the access to the general capital happens, right? So where people are able to best deploy their capital is where you'll generally see rates go. I think that the rates are pretty aggressive right now, but one of the things that we love about the fintech ecosystem is that it's a capital market, right? So it's going to be driven by what the market demands and what the market will bear. I think the one thing that we're not aware of or not sure of is what will happen to those loans in a kind of a negative, if a recessionary environment starts to happen and some of those loans that are made go bad. So I think there's always going to be a little bit of risk priced into them at that angle. But generally, I would say they're probably going to stay flat with the general environment. They're not going to get much lower, in my opinion. They're certainly not going to get inverted. But I'd say they're going to be priced up a little bit for risk, but they're generally going to move with the market.
Can you comment? Have we learned anything from the European markets and where they've been with respect to interest rates?
Well, I mean, I think that in terms of the fintech debt markets, that's a whole different kind of animal. I think that the biggest challenge is going to be what is being securitized, and that's people are ultimately lending against. If you think about what my colleagues on the stage are doing, we're all lending against different things. So the way that you risk price a small business loan through investors, that someone comes into the branch to support a pizza store, is a lot different than the way you'd price, a loan that is made through an Alt-A channel. And so I think that ultimately what we try to do is really understand the risk profile of the borrower, and we're really working with our partners to do that, and then make sure that we're providing liquidity into the market commensurate with the risk of the loan.
Great. Ashwin, any thoughts on?
I could agree with you in everything you explained, but From my perspective, I've done a couple lending for the fintech companies, but they have to be very established company, at least for 2 years. And we do things from a very simple, small lending loan to a streamlined underwriting loan. So we look at everything from a broad perspective and make recommendation for certain things that you want. If you're looking for a cash flow, you're looking to fund a project, we need to know all those reasons. And in terms of the revenue, it has to make sense because some companies they say they have X and Y and Z, but doesn't show on their return. So in order for a company to be profitable, we have to look at all that perspective.
Charles, get back to the negative interest rate comment. I want to get your perspective on that.
Yeah, I mean, to me, there's, I tend to agree in terms of in general. I mean, you're pricing for risk, right? So even if you have negative interest rates, that's a risk-free rate. The loans to a small business in particular, are not risk-free. So there's going to be an inherent premium price there. I think my bigger worry, if we get to a state where we do have negative interest rates, or we have some combination of stagflation where the economy slows, doesn't necessarily go into recession, but inflation now is exceeding what you can get there. I think the challenge there is do we see greater pressure on small businesses in general, or to even get to negative interest rates, do we have a situation where we are in a full-blown depression or recession? And there was a lot of hubbub a month or two ago about the inverted yield curve, and people lost their minds, and Twitter was going crazy. I mean, it happens from time to time. Yeah, it's a leading indicator that things are wonky, but I think we can look around and see things are wonky. I don't need a negative.
So just one thing to add to that, and one of the things that I think that when we think about the fintech ecosystem, we all have responsibilities for, that in many ways what Cross River tries to do is provide products to minimize the need for capital. So if you think about what someone's doing if they're running a small business and they're trying to float payroll, and what that means in terms of how they deal with payments from suppliers, how they may go get a loan that's a factor, or something along those lines, we really try to enable you to have as quick access to your money through our fintech partners. So if you think about a Stripe and what they're doing with merchant cash advances to give early availability on Visa and MasterCard receipts, there's a lot of things that we play a part of that make sure that small businesses have access to the capital they've earned. And hopefully no matter what the interest rate environment is, I think what fintechs are trying to do in general is give people quicker access to their funds at better rates that are risk adjusted. So again, it's always going to be a 0+, but you need to really think about if fintechs are able to take the data, the rails, and the combination of the ecosystem and provide some service that actually allows that small business to borrow less so that they can pay themselves more.
Yes, ma'am.
Hi, sorry, my name's Ashwin. I'm a community development manager and a leasing associate with Honigberg. It's so timely, so relevant that you said that, because one of my tenants came up to me and they were asking me, so we do lunch and learns, we do all kinds of stuff like that, but they are experiencing cash flow issues, right? Which also has an impact on us as a property manager or as a lessor, because that means that we're not getting our rent on time. So you mentioned something to me about factoring. Is that what you were just, I had no idea what that is. Is that what you were just kind of talking about?
So factoring's a really interesting business. It's a really old business. So what it is basically you have an invoice and a bank buys that invoice from you at 80 cents on the dollar, and then they collect on it. And then when they collect, they may keep 3 or 4% and then pay you the balance, right? So you would end up getting 96 cents on the dollar or something like that. I've actually never seen someone factoring rent receivables, but I'm sure there's a fintech that's doing it, right? There's a lot of very interesting companies that we work with that specifically help your situation. Rent2Go is one that we spend a lot of time with that I recommend looking at. If you want to connect with me, I'll be happy to make some introductions for you. But it's really about solving problems like that. So there's someone who's in a difficult place. How do we think about the power of the community of where fintech operates and use that to create leverage for someone who's in a tough time? And there's no perfect solution to your question, but there's a lot of answers that we can bring to bear to hopefully help out.
Yeah, and I mean, I think also from a factoring perspective, it has been around forever. The challenge is it can create this vicious spiral where you need money now. I mean, whether it's to pay your rent, whatever the case is. So, oftentimes the terms are obfuscated deliberately to make it very difficult to, I mean, people see a 20% APR and their minds are blown because they're used to getting a mortgage at 4, or they're used to getting a car loan at 4.99 or even 0, depending. What they don't realize is and then they hear, I mean, we've had people in our business say, I've got a 1.25 factor, I'm fine.
They don't realize they're paying that every 30 days.
Right, exactly. And part of this is education. So particularly for your clientele, your customers, your renters, oftentimes there's not a lot of financial education. They don't realize they're getting hosed, and that's one of the things that at Credibility we look to do. Some of our reps are not so much salespeople as they are educators to try to help businesses make good decisions. And just to plug, one of the things we're looking to do is just having financial literacy classes, having our underwriters just have an open session for the community, along like what Investors Bank does, just to say, hey guys, did you know this is what's happening? So great question, thank you.
Last comment, because we're going to be closing up, so we're running over.
Just one last thing in terms of that. One of the things that I think that all of us here do is when we see an opportunity to educate the community, we lean into it. Monday I'm going to be at a school in Mount Vernon teaching financial education and literacy to a bunch of third graders. I'm partnering with Bergen County Schools to do that for high school students. So, what we really try to do is think about where there's need for financial education, financial literacy, and then not only bring ourselves as a bank, but bring our fintech partners along for the ride so that you can understand what's the power of possible. And candidly, our job as banks is to play a role of trust, but also one to play a role of security and enablement. And I think Crossover really takes that role very seriously, and personally, I take that role very seriously. So if there's anything that either I can do or anybody else on the stage can do, we'd be happy to help out.
Ashwin, I'll give you anything you'd like to say? Part?
No, I think I agree with everyone here. We do the same thing. We do a lot of mentorship program, and we reach out to the community, and we do financial literacy with anyone that needs assistance, and it's important for the generation, even someone that doesn't have any financial background or anything like that. So we do that.
Someday we'll figure out how a car lease works, right? Please welcome, thank panelists for me. Great job, guys. Really appreciate your time.